So this is the gold rush for Bitcoin because you've got the institutional endorsement, you've got the regulatory endorsement, you've got the banks clamoring to get in. Some are already getting in. The news this week was the largest bank in Brazil. In fact, the largest bank in South America is Bank Itaú, has announced that their customers can buy, sell, and custody Bitcoin with the bank. Imagine if JP Morgan said, hey, all of our customers can buy, sell, and custody Bitcoin with our bank. Well, that's what happened in Brazil, right? So you can see all these dominoes falling. Every quarter for the next 40 quarters, you're going to see more banks embrace Bitcoin. You're going to see more Wall Street firms. You're going to see more institutions step up. You're going to see more companies like Semler Scientific.
In a recent interview on Bitcoin News with Michael Saylor, insights were shared about what it will take for Bitcoin's adoption to accelerate and for its price to rise further. Currently, Bitcoin is trading around $66,000, showing a 1% increase in the past 24 hours and a 2% increase over the last week. Saylor underscores that Bitcoin's adoption is inevitable, driven by its superior monetary properties. He highlights that Bitcoin is the world's first engineered monetary system, designed to outperform both gold and fiat currencies. Regarding institutional adoption, Saylor believes it's only a matter of time. He contends that as institutions increasingly recognize Bitcoin's potential as a store of value and a hedge against inflation, they will inevitably move towards it.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Bitcoin's always going to be the best investment. It's always going to be the best idea. Bitcoin is digital capital. And so once you understand capital, capital is a store of value, it's economic energy. If I can store capital in digital form and I can move it between any of billions of computers or any of millions of companies, if I can move it at any frequency, if I can program it using the most sophisticated servers, if AIs can trade Bitcoin with each other, when a billion AIs are trading with each other, they're not going to be trading buildings with each other. They're not going to be trading copper tokens or gold bars. They're not going to want to trade Apple or Amazon stock with each other. They're going to want to trade digital capital with each other. They're going to want to trade Bitcoin. And Bitcoin is, because it's digital, and because it's deflationary, it's got a half-life of forever, right? It's permanent, immortal capital. So when you think of it that way, you think, well, what do I want to own? Well, I want to own perfect capital, perfect money. And if you look at it statistically, right, Bitcoin has been, for the last 4 years, it's returning 4 to 5x as much as the S&P index. And it's been 4 to 5x as volatile. And the reason it's volatile is because it's a free capital market. It's a global capital market, and anybody can express any sentiment anywhere in the world, any second of the day, as frequently as they like. And the reason it's high performance is because of its technical characteristics. So what'll happen? Over the course of 20 or 30 years, Bitcoin will start to be just twice as good as everything else. Bitcoin's 5 times as good as the next best thing right now, but maybe one day in 20 years or 30 years when Bitcoin is the size of the S&P 500, maybe it'll only be twice as good. But it's always going to be better because it's pure digital. It doesn't have the physical liabilities of physical real estate or physical property. It doesn't have the cultural liabilities of art. It doesn't have the corporate liabilities of equity. And it doesn't have the political liabilities of currency. And it doesn't have the credit risk of debt. So you're buying Bitcoin, you're buying the best thing. When should you buy something else? When something else is better, you should buy something else. But there isn't anything better. There isn't anything better now. There won't be anything better in the future. So the logical trade is you keep trading the weaker thing to buy the stronger thing. And MicroStrategy's done it with hundreds of millions of cash, with billions of dollars of equity, and with billions of dollars of debt. And we'll continue to acquire Bitcoin, and we'll sell products to get cash for Bitcoin. Maybe from time to time we'll sell some equity instrument or some security instrument. But there's no reason to ever stop that strategy, because Bitcoin's just going to continue to be the best thing. It's just a question of, is it 10 times better than the next best thing, or 5 times better, or 2 times better? But of course, those don't really matter, right? The directional answer is the same regardless.
Having just heard Michael Saylor discuss Bitcoin, let's delve further into his perspectives on adoption and recent developments. Saylor highlights that Bitcoin's adoption is rapidly accelerating, driven by key milestones such as the approval of spot Bitcoin ETFs. He notes that these ETFs have enhanced Bitcoin's price and made it more accessible to institutional investors. Saylor also emphasizes the increasing interest from banks and financial institutions, forecasting that widespread adoption of Bitcoin is imminent. He attributes this anticipated growth to improving regulatory clarity and a deeper understanding of Bitcoin's value as a store of wealth. Now, let's hear Michael Saylor's thoughts on Bitcoin news about the future of institutional adoption and Bitcoin's role in the global financial landscape.
I'm pleasantly surprised at the rate of Bitcoin adoption and the political acceptance. When I started in 2020, I didn't expect that we would have so much progress in the area of, say, spot ETFs. I mean, the spot ETF was a great windfall. Fair value accounting is a second windfall. The political sentiment and the drive to allow banks to custody Bitcoin is a third really pleasant surprise. The fact that that Trump has come out so positively in favor of Bitcoin is a fourth surprise, a pleasant one at that. But it's not unreasonable, right? This is the digital transformation of capital. We're going to go from 0.1% of the capital to 20% of the capital in the world, or 30% of the capital in the world digital. So it's happening. It's rational. Anyone that cares about capital markets, cares about money, cares about the economy, cares about technology, should embrace it. But nevertheless, when it actually does happen, when you see the Bitcoin lobby join with the crypto lobby, join with the Wall Street lobby, join with the banking lobby, all to clamor for banks to adopt Bitcoin and custody their own keys, right? I mean, think about that. It's a really cool thing that we'll actually see Bitcoin become a settlement network and become a reserve asset for the banking system of the world. And we're not quite there yet, but you can see the writing is on the wall, and the most progressive politicians are seeing that this is in the national interest. Normally, the year before the S-curve kicks in, everybody thinks it's not possible. Right? In 1903, before the Wright brothers flew, the New York Times had front page articles saying, experts show why flight is impossible, will never be achieved. Right? So, with AI, people working on AI since I was at MIT, and, Apple pointed out Siri is like whatever, more than 10 years old. And yet it's, the early versions of Siri and Alexa were like used to pick your playlist, on your music streaming service, but not for a lot more than that. And it was really just with ChatGPT-4 that you saw this first massive commercially viable thing. They went from 0 to 100 million users in a month. It's like, and everyone that was skeptical of AI, they use that, and they're not skeptical anymore. They're like, oh, I get it. That works, right? That works. And the killer app for digital capital is these spot ETFs, and they got approved in January of this year. And there are hundreds of millions of dollars a day flowing into these things. And there's $1 billion a day of trades. So imagine $350 billion a year of transactions on those ETF layers in the first year. right? So that's only going to accelerate. And I think that that with regard to, the spot ETFs, they catalyzed corporate and institutional adoption of digital money. And you see, examples like BlackRock has days when they buy hundreds of millions of dollars of Bitcoin. You see institutional hedge funds hold $1 billion or $2 billion worth of Bitcoin via these ETFs. And you see pension funds, the Wisconsin pension fund allocates $170 billion or something like that to buy Bitcoin. And then they go, oh yeah, that's 0.1%. We need it to be 1% to move the needle. So we dip our toe in the water, but you realize now institutions, corporations are moving in size that is order of magnitude and 2 orders of magnitude greater than was going on before. That's going to continue aggressively for the next decade. And that is the Bitcoin gold rush. I mean, the reason that's the gold rush is because by 2035, 99% of the Bitcoin will have been mined. So right now is the time when you've got natural sellers. You've got 450 Bitcoin available a day to buy from someone that might want to sell it to you, right? And when that supply gets cut off, the only way you're going to get Bitcoin is to take the price up and get it from an unwilling seller.
In summary, Michael Saylor offers valuable insights into Bitcoin's future, emphasizing the significance of regulatory clarity and institutional adoption. Here are 2 thought-provoking questions for you. What do you believe will be the biggest challenge for Bitcoin's adoption? How do you envision Bitcoin's role evolving within the global financial system? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.